The brakes are on for the market. At least it feels that way. Is it true? Is it all the feds, the rate hikes? Or is it seasonality? Hey everyone, it's Alyson with Live South Denver, your real estate strategist and realtor for the South Denver area. Let's jump right into the September market update, and then we're diving into some market index visuals and some analysis of how warm or cool the market really is right now. Buyers put nearly 4,500 homes under contract in August. That's 200 more homes than the month before, but a 21% drop off from last year. We saw 4,100 closings in August. That's exactly on par with the previous month and down 27% from the year before. 4,900 new homes hit the market in August. That's 1,000 fewer than the previous month and 14% less than we had the year before. So if you watched last month's market update, the numbers in that one showed that we were in this cold and tightening market and it was just on a downhill slide, and I shared that boots on the ground last month was very active and hot and there was a lot of tension in the market for buyers. Well, these numbers show it. We had 200 more homes go under contract, 1,000 fewer homes hit the market, so there was a lot of tension and activity for the homes that were available, particularly the new homes, the ones that are fresh, the ones that look good. Everyone's seen the older homes. Those are the ones that kind of sit there and people are like, I don't know, you know? So it was a very active month last month, despite the general downward trend the market is seeing. We ended August with 6,300 properties for sale. That was actually 200 fewer homes than we had the month before. We finished up August with 1.51 months of available inventory, and that's actually a tick less than we had from the month before. The good news is for buyers, and everyone is feeling it, is this is double the inventory we had from a year ago. And what that tells us is if that rates were not at 6% right now, roughly, the Denver market would be humming along. There'd be so much choice. Buyers would be loving what they were seeing. Sellers would also still throw their hat in the ring because inventory would keep moving along at a pretty quick clip. The average days on market increased by 4 last month in August. It went up to 18, so it's taking on average 2.5 weeks to sell a home last month. The average days on market was 11 in August of 2021. For a little perspective on that, in August of 2017, 2018, 2019, the average days on market was 25, so we are still besting that by a full week right now. The median days on market moved up a full 5 days to 11 median days on market last month. Again, we haven't hit some tripwire of, oh my gosh, the market is falling, because in the pre-COVID era, back in August 2019, the median days on market was 14 days. I will say the increase in the days on market is probably the hardest part of this for sellers. It's hard to put your house on the market and not walk away for a weekend anymore and come back to multiple offers that you can even counter and get up even higher than the original offer was, and be under contract, seamlessly close in 30 days with maybe almost no contingencies, no one asking for anything on inspection, and it be one of the easiest things you've ever done when what you've heard your whole life is selling a home is stressful. It is a stressful event. There can be issues and challenges and pushback from both sides, and it really hasn't been that way for about 2 years. So this increase in the days on market, this increase in empowerment on the buyer's side, though sellers, you're not losing all of your power, is still one of the harder things for sellers to embrace right now. All right, let's get to those August home prices. The list price to sales price ratio across all of Denver, even if we include Boulder, is still below 100%. We're at 99.4 for list price to sales price ratio. The average closed price last month for all homes was $651,000. That's down $34,000 from the month before, up 7% from 1 year ago, and still up 24% from 2 years ago. A single family home price average is $740,000. That's down $38,000 from the month before, up 9% from last year, and up 36% from 2 years ago. The condo and townhome average price is $451,000, down $20,000 from the month before, up 4% from last year, and up 21% from 2 years ago. Okay, pushing over to the median home prices. The median sold price of all homes, $575,000, down $20,000 from the previous month, still up 9% from the year before, and up 26% from 2 years ago. Median price for a single family home is $640,000, down just $10,000 from the month before, up 10% from 1 year ago, and up 28% from 2 years ago. When we look at condos and townhomes, the median price is $397,000, and that's down $8,000 from the month before, up 7% from a year ago, and still up 22% from 2 years ago. When we compare month-over-month changes in the average price segment versus the median price segment, the average dropped much more drastically. So in the average price point, we saw over a 4% change in price month over month. And in the median price segment, it was only a 1.5% change month over month. So what that's telling us is we are seeing fewer, more expensive homes sell, which is bringing the average down faster. It's why I like to focus on median price points so much. It's why you get both from me, because the median tells us, I think, a cleaner story. All right, key takeaways for you out of all these numbers and this data. I want to start with price drops. The media loves to talk about negative, right? If it bleeds, it leads. Well, they are talking about the bleeding housing market non-stop. And yes, the market and the prices are dropping, and honestly, it is some good news. It feels good. No one wants to pay peak prices. We all love a deal, right? You go into the store and you see a slash across a price and you see a new lower one. It draws us toward that item. Well, funny enough, there's a thing about that with housing. If we see prices dropping, we kind of go, no. We somehow want to wait to the bottom. Well, timing a market is a really hard thing to do. It's hard to do with stocks. It's hard to do with real estate. So we should, just as we do in a store when we see a sale price and a slash mark, be looking toward real estate when we see prices dropping. Doesn't mean you have to buy right then, but we should be keeping our eye on the market. The thing that's not slashing, obviously, are interest rates. Those are on the rise, which is painful. Zillow is always tracking data. They're one of the large conglomerate data gatherers, and they're putting headlines out on a regular basis about the data that they're finding. Back in July, they put a report out that ranked Denver as the 9th worst city for dropping home values. I want to call that out. Let's look at a little bit of data. Over the last 6 years in the Denver metro area, the average home prices have dropped between June and July 5 times out of the 6 years. The only time they didn't was in 2020. That's tied to the fact that people couldn't see homes from roughly March to May. So our market actually did a rebound starting in June and July. So it's an outlier year. So here's the data looking at 2017 to 2022 for how home prices across the Denver metro area have dropped every year from June to July. So Zillow is correct that our home prices dropped, and maybe we were the 9th worst city for those home price drops this past year. They actually said our home prices dropped 1.8%. Our data shows bigger. The thing is, this is normal for our market. We're a seasonal market. Our home prices peak every year in May or June. That's normal for us over history. It's changed up these last few years. We've had some funny timing with our peak prices since the pandemic hit. We've peaked twice. Last year, we peaked in June and December. This year, we peaked in April. But historically, if we look prior to these 2 years, we've always peaked in May or June. And from there, we are on a downward trajectory through the end of the year, usually bottoming out around January, and then we climb back up. I've always told all of my buyers, if you're trying to capture the most equity you can in a year, you buy your home early because the market's just going to rocket through the first 6 months of the year here. And then we just kind of taper off quietly. And then the next year, we just rocket through the first 6 months and then we taper off quietly. It's our general cycle here in Denver. So as we're talking about price drops, as we're talking about what the market is doing, yes, so much of this has to do with the inflation in the market, mortgage rates, but there is a large component that is seasonality. Let's look at median prices. Are median prices dropping faster this year than they have over the last 5 years or so? I'll give you the short answer. It is yes, but let's see how drastically. We're going to look at data going back to 2017. We are going to exclude 2020 and 2021. And it is just for the reasons I mentioned a moment ago. We had 2 peak price points last year, summer and December. So it's hard to measure, right? We can't kind of count a peak and then go forward and measure from there because we had a peak a little bit later. And the year before, we peaked in October. So if we measured forward a few months from there, we'd be in the next year. So those 2 years get excluded. If we look at the rest of them, this is what we find. 2017, the median price peaked in June at $387,000. 4 months later in October, our price was $372,000. That's a drop of 4% over those 4 months. In 2018, the median price peaked at $417,000 in June, and we were at $398,000 in October, a drop of 4.6% over 4 months. In 2019, our median price peaked at $429,000 in July, and we were at $419,000 in November, a drop of 2.3% over 4 months. This year, in 2022, our median prices peaked early at $617,000 in April. We were at $575,000 in August, a drop of 6.8% over 4 months. If we look at that 2018 data again, that's the year we had the largest difference. That year, we also had a 1.25% increase in interest rate over the year. This year, we've had a 3% increase in interest rate over the course of the year. So it's really not a surprise to me that we're seeing prices decrease at a faster pace because of where rates are this year. Other things I see from these numbers, the market boots on the ground, are the rebound buyers that jumped back in the market in July and August that had sat back and weren't there in May and June. Those buyers, most of them have bought. They have landed, found their home, captured on those 5% interest rates. They are gone. That is part of why the market is really feeling much cooler right now. Also, we cooled down from Labor Day moving forward. So it is some seasonality, it is some rates. That Jackson Hole meeting of the Feds that pushed rates back up towards 6 and the one coming up next week toward the end of this month is also putting its tension on the market. Buyers were really comfortable getting a rate at 5.2, being able to maybe negotiate a little buy down and getting into 4.8. Now that we're up towards 6 with talk of maybe getting above 6 because the Fed said they're not relenting on rates and combating inflation is really putting some tension on buyers. And then as I just shared, price gains are slowing at a more rapid clip than we have been previously. But that does not mean that we are in an era of home depreciation. We are seeing price gains slow down, not price decline. This market is not cold. It can be hard to believe, particularly with all of the media, and I'm gonna show you that with these market index snapshots. Sellers, you will love me for this because it proves that there is still power in your ball court. These little speedometers, if you will, are showing how strong the market trends toward being a buyer's market or a seller's market. Right now, all of the markets that I'm showing you, Highlands Ranch, Castle Rock, Parker, Littleton, are all very staunchly still in the seller's market category. No, they're not off the charts like good luck buyer, but they are not sitting staunchly in the buyer's market category. What I can tell you is that sellers need grit and fortitude once they find their sweet spot with their pricing and know they are priced well among recent comps and even pricing maybe a little ahead of the market and where it's headed to just sit and wait for enough buyers to see their property. 40 days would not be uncommon, even heading towards 60 right now. You just need enough exposure. Buyers are willing to pay for the right home as long as it fits into their budget. Okay, give me your thoughts with rates going up, with the lock-in effect of sellers not necessarily wanting to sell and leave behind that refi they got last year and the year before. What do you think about the market? I think inventory is gonna be staying tight. I think prices will stay fairly level and firm, but what does that mean for you, particularly if you're a buyer? Do you plan to wait out the rates? Do you plan to look for a rate buy down from a seller? Are you thinking you'll jump in now and go for a refi later? Are you in the camp of wanting to just wait out the prices and hoping they'll come down? I would love to know what you're thinking. Leave a comment, join in the debate, stir the pot. Whatever it is, we love to hear it. As always, great to be with you for the market update. And if you want to chat about the market, please reach out. We're always happy to connect. And I will see y'all next week.